Good evening. Welcome to my end of the week recap here for S&P 500 and plan ahead for next week. If you follow my Apple videos, same thing applies here. I'm not going to be able to trade intraday for the next few weeks, so if I do take any positions, it will be 5 to 6 weeks out in the future to see what happens for a longer term swing trade. These will be bullish trades, even though price action is very bearish, which we'll get to momentarily. First of all, here Thursday, I did take a few trades here. As you can see, a lot of notes here in this 15 to 20 minute range, which is very counterproductive from a trading standpoint, and I cannot continue to do that. That's simply over trading, and it does lead to blown accounts. So I've caught myself, and it will not happen anymore. Now, the trades I did take, 267 puts here, first at 160, trailed me out on that initial entry at 149 once VWAP was slightly reclaimed. Sellers hit the tape, so I did quickly get back into the same 267 puts here at 150, half out here at 165 when it looked like buyers were starting to hit the tape and stop me out again at 150. So overall, that whole area right there was pretty much a wash. Price action pushed up here on some good strength, or excuse me, good volume, intraday anyways. Reclaimed VWAP, closed above, had a consolidation candle, looked like it was going to continue higher. So I took what I hoped to have been a longer term swing trade in the 20 April 280 calls here at 38. From this point, 280 at least looked like it would have been possibly doable because at that level was potentially a new higher low, which would imply a new test of this high. So that was my theory behind it. It did fail once price action rolled over and took out what looked like was going to be an abandoned baby type of candle. Closed them out here at 33 cents towards the end of the day. Over here onto Friday, I took one bad trade. I mean, it was a decent trade, just a bad spot and a bad fill. So whatever. Got in 263 puts here at 146, trailed me out at 115. Got a horrible fill on that entry. To be honest with you, sometimes that does happen. I got out right before it started rolling up higher. Now it did roll right up into resistance. The 8-period exponential moving average came down here, and I believe it was scooping up. And once it broke below the 8 EMA and the VWAP right here, I believe a lot of the trade crew members got in 263 puts here and wrote them down for a nice gain. As you can see, they closed out being approximately $5.50 in the money. So nice trade there. I missed it. I was watching some other positions I was in, so it is what it is. Hopefully catch some new ones. A nice slower, lower volatility play going into the future. Now I want to pull up the notes that I actually did have going into the week and into the second half of the week. Had I listened to myself and obeyed my own plan, I would have taken 270 puts here on one of these two pops, three pops roughly, as they were priced at about $2 at these highs. End of the day Friday, they were all the way up to 12. So huge missed opportunity there. We'll be looking to make up for that and hopefully take some decent long swing positions going into next week. Price action has now come down to the 200 SMA on the daily time frame over here at about 258. Volume is confirming there's participation in the price being sold off. The only hope is for the bulls that maybe this selling down here was absorbed and there will be a nice gap up inside day on Monday, at which case that will imply that the strength of the selling has ended abruptly and there's going to be some indecision. So if price action opens up and leaves an inside day in here, Tuesday, maybe Wednesday, I will be looking to trade back in the direction of the original trend, which is up. If price action does not, if it opens up higher and starts selling off, comes back down through here, I am going to watch this next level around 252-ish, which is the low of the previous dip. If it comes down there, it will make a lowercase h. You got a leg, the hump, all the way back down to lowercase h. Also looks like a double top pattern, which has a measured move to about 240. So it's a very bearish pattern right here. Sellers are winning for the time being, and they can continue to do so until some sort of significant outside force affects the markets. Now, it could be an abundance of buyers, it could be some sort of news, it could be really anything. But for now, it's just time for me to be patient. If I was able to trade intraday, I would be happy to go with the momentum. I'm just not comfortable with holding puts for a swing play. So I'm picking my levels here, 252.5, maybe 250 simply because it's a nice round number, and definitely down here around 240. For now, this will be my trade plan for next week and going into the future. Have a good weekend. Feel free to leave your questions or comments down below. Good luck.